Welcome to the Deep Dive by OVTLYR, where we uncover the market's hidden trends and give you the edge you need. Head on over to OVTLYR.com right now to save time, make money, and start winning with less risk today. Now let's jump right in.
All right, hey everyone, welcome back. You're ready to dive in. Today we're tackling Intel's Q3 earnings. And let me tell you, this was not your average quarter. We're talking job cuts, rumors of takeovers, and a whole lot of drama in the chip world. So to get to the bottom of it all, we've got Intel's earnings report right here, fresh off the press, and some really insightful analysis from CNBC. Think of this as your cheat sheet to understanding what's actually happening behind those, kind of crazy headlines. First up, the numbers, right? Got to start there. Intel actually beat earnings expectations. They reported 17 cents adjusted earnings per share. 17 cents. Analysts were expecting a 2-cent loss, like a total shocker. But here's where things get interesting. Revenue actually dipped a bit, down about 6% compared to last year. So what's the deal?
Well, it's fascinating, really. These kind of contradictory results, they actually tell us a lot about Intel's strategy right now. Yeah, revenue's down, and that's largely because the PC market is shrinking. But Intel's making some big moves, slashing costs and really focusing on those higher growth areas like data centers. And that focus on profitability, well, it's starting to pay off.
So they're like tightening their belts while making some strategic bets, huh?
Exactly. And these aren't small bets either. We're talking a massive restructuring, $2.8 billion in charges, a whopping 16,500 jobs cut. They're even shrinking their real estate footprint. This isn't just trimming the fat, This is a whole operational shift.
Wow. 16,500 jobs. I mean, that number's really striking. Shows how seriously they're taking this transformation.
Absolutely. And to understand why they're making such drastic moves, we need to zoom out a bit. Look at the bigger picture. Intel's fighting to survive, basically. They've got fierce competition, and the whole AI explosion is changing the game for everyone.
Yeah, it feels like the ground's shifting under their feet. So how do they regain their footing in this, constantly evolving tech landscape?
Well, they're going all in on two key areas. First, they want to become a leading foundry, essentially making chips for other companies. And second, they're pouring resources into developing their own AI capabilities, especially those gaudy AI chips.
Hold on. Becoming a foundry, that's a huge change for a company known for, making their own chips. What's driving that strategy? And is it even realistic?
It's bold, no doubt. They see opportunity in this growing demand for custom chips. Companies like Apple, Amazon, they're designing their own processors now. And Intel wants to be the one manufacturing them. It's a gamble, though, a high-stakes one. They'll be going head-to-head with giants like TSMC.
Sounds like a classic high-risk, high-reward situation. Not for the faint of heart.
Exactly. It comes down to your risk tolerance, and your assessment of Intel's ability to actually execute their strategy.
All right. So let's say someone is brave enough to consider investing in Intel. What would you be watching for in the coming months to see if their gamble pays off?
Well, a few key things. First, how well are they implementing that restructuring plan? Are they hitting their targets, for cutting costs?
Yeah.
Making progress, streamlining their operations?
Okay, so progress on the restructuring, that's key. What else?
Second, how are those gaudy chips actually performing? Out in the market, I mean. Are they gaining traction? Winning over customers? And are they building that ecosystem, giving developers the tools and support they need?
Gaudy's performance is crucial. Anything else?
Finally, what's happening with the competition? Are they losing more ground to rivals? Are they attracting interest from potential acquirers? The answers to those questions, those will give us a much clearer picture of Intel's long-term prospects.
Feels like we've got a lot to keep track of with Intel.
Yeah, it's a dynamic situation, that's for sure. A lot of moving pieces.
Definitely. It's exciting, nerve-wracking, kind of makes you bite your nails, but hey, at least it's not boring, right? So for our listeners out there who've been with us on this deep dive, what's the one thing you really want them to remember about Intel right now?
I think the biggest takeaway is that Intel is at a turning point.
Yeah.
The decisions they make these next few months, those can shape their future and maybe even the future of the whole tech industry, to be honest. It's a reminder that even the giants, they can stumble.
Yeah.
And being able to adapt, innovate, that's essential if you want to survive in tech, especially these days.
It's like the classic tale of disruption, except this time the disruptor's the one getting disrupted. Kind of ironic when you think about it. So to our listeners, we want to leave you with something to think about. Given everything we've discussed, would you bet on Intel? What would you be watching to see if their big gamble pays off? Thanks for joining us on this deep dive into Intel's wild Q3. Until next time, keep exploring, keep learning, and keep diving deep.
Hey, thanks so much for deep diving with us today. Head on over to OVTLYR.com. That's OVTLYR.com to save time, make money, and start winning with less risk today. And we'll see you next time.